Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
Welcome, ladies and gentlemen, back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Cyprian, glad to be back.
Welcome back to episode 86. Excuse me.
86.
Or 87.
Wow.
87. My apologies.
Oh,
87. Today
even
is
more wow.
Yeah, right. June 30th, and the news is very optimistic this morning. As soon as I turned on the financial screens, I saw a bar about this long heading in the positive direction, and I believe that's fueled by inflation numbers, correct?
Yeah, or more importantly, numbers that feed what the Federal Reserve, if we take a look at our economic news here, what we're taking a look at is I think things have been buoyed very nicely by these personal income and outlay reported today. Personal income and outlays, this is the report that Alan Greenspan made very popular. It's the one that he liked to follow. So if we take a look at those, they basically say that things are doing better than we expected, especially in these core personal consumption expenditures price index. You can see that that's coming in at 4.6 here. But that's for the year. And a lot of the Fed chairmen, the folks that have been speaking throughout the months, they've been saying that we don't need to look at these year-long numbers any more than we need to look at these monthly numbers, right? These monthly numbers are going to be more important because we did so much in such little time that looking back a whole year isn't going to give us much information. So this 0.3% number, if you multiply that out in the future by 12 months, it's 3.6, which is much smaller than 4.6 and much closer than that to that 2% goal that the Fed keeps talking about. So, I mean, things are moving in the directions that they want them to. This is all in contrast. I mean, if you look at the week, Sip, what you've got here is we started off on Monday after coming back, and it's like starting doldrums now. Monday was a little bit of a bearish day. We had, and that was following a bearish prior week. And that all had to do probably with some more downgrades. We've been getting a lot of downgrades. Goldman Sachs joined on the bandwagon to downgrade Tesla. And then UBS came in and downgraded Alphabet, which was the parent company of Google. So Monday kind of was like the capper to last week's down week. And so we were having this contraction of our current uptrend up until that point. But then Tuesday, if I bring up our economic calendar, Tuesday we had these durable goods orders reported early in the morning, and then consumer confidence right after the market opened, and new home sales. And these all came out much better than expected. In fact, the new home sales came out really high. People are like taking advantage. They want to take advantage of the lowest rates that they can. And as soon as new homes are available, they're buying them. They're taking this moment to, lock in new homes. And so those all came in quite exciting. And that gave investors, it seems like, a little kick in the pants to like come on back and start buying again. Tuesday was a real nice up day. And we saw a lot of buying in the small caps versus the large caps, and more into value stocks versus like tech plays and growth stocks. And then we had some discussion from Jerome Powell on Wednesday, and he reiterated that more interest rate hikes are probably coming, but that they're going to be looking at a month by month basis. And so, yeah, Tuesday got a little bit of a kick in the teeth in the morning, But then everything just has been coming in positive. International trade, we've been exporting more than we've been importing, which means that we've been getting more money in than we have been what we expected to shell out. And then in addition to that, we had GDP numbers. Gosh, I got to show you this. The final GDP numbers. So remember that with GDP numbers, they report them 3 times, each time going back and revising them and looking at them. So this is the last time that they're reporting on quarter 1 numbers. They're going to come back and report on quarter 2 next month. But they revised this up a little bit more than expected. So if you see over here, the last time they looked at these numbers, it was 1.3 and 3.8. These came in at 2 and 4.2, which kind of gave people more of a belief that perhaps, a soft landing is possible. That's really the question in people's minds is all this tightening that the Fed is going to be doing, is it going to cause a recession, or are we going to get to continue on our growth path? And then with the PCE numbers coming in the way they did, people are just really, really stoked. So you've got this combination of having big companies like Google and Tesla being downgraded, and you've got Jerome Powell reminding us that he's going to keep raising interest rates. But at the same time, things are just good, right? And so it looks like we're starting to do some buying.
I keep thinking that the soft landing is kind of the theme behind a lot of this data and a lot of the assumptions. Um, and so last week we talked about a pullback in the S&P, right? As maybe that being an opportunity. And
I,
so given this week's data, do we think that was kind of the pullback?
That was the pullback. Here's where I'm a little bit concerned. So this is AJ Brown speaking, always out of turn, but I wanted to see more of a pullback. So let me zoom out just a little bit for you. This is from a technicals perspective. So if I zoom out just a little bit more here, not that far, maybe to about a 6-month range, you can see that we've been in this uptrend. I've got it drawn here with this channel. This is the dotted line is a linear regression line. The green line, vertical line here is where the uptrend started. And so we've got this uptrend. And what you'd like to do is every time you see the short-term trend work against the greater medium to long duration uptrend, that's called a range contraction phase. You'd like to see it come all the way down to this level of ascending support. That way, the trend kind of recharges. And now, when people start accumulating stocks again on the next cycle, they'll do it with vigor. There's no question of being overbought or anything like that. Coming down to this level of support, or the other way to measure it, and I look at both of these, is coming down to about halfway the previous move up. And so halfway, I just kind of my magic marker here and right here. And I think now is the time to zoom back in so you can see that a little bit better. Yep. So I would have loved to see it come somewhere around here to this halfway zone. I call this the center zone. Or down here, you can see the center zone and this level of support are kind of the same thing. And instead, it fell short. Instead of getting below that 4,307 number that I've got here, you can see that instead it stopped at 4,328 before it started to go up. So my personal fear is that we didn't get enough distribution for this next uptick. In other words, you're kind of pressing the gas pedal and then never letting the batteries recharge when your foot is off the gas pedal, so that when you push it again, it's not going to have the same oomph. And so even though, and as of right now, we've already joined into a range expansion phase, meaning we've already surpassed where we closed at the high last time. Last time we closed at 4,425. We're already well above that at 4,449 and 13 cents. We know that we've got some overhead resistance at 4,600. So we're watching that very carefully. 4,600 was from some previous highs. So we're watching that number carefully, but I'm just personally afraid that we're overextending this current buy without giving our folks, good prices. If things would have retraced or contracted just a little bit further before we started buying on Tuesday, we would have gotten more people jumping in on these low prices. You have to distribute enough so that then you can accumulate to the next level. And I just didn't see that. So I'm a little bit on edge. And honestly, a lot of investors seem to be that way too, Sib. We're seeing like the early adopters doing this buying. We're not really seeing the whole market whole hog jumping in behind them.
Yeah, and I was gonna actually ask, is that like a pre-market thing where everyone's reacting to these inflation numbers and that's where the follow through isn't coming in? Like, I guess if we would need to wait through the end of the day to see if more follow through comes in.
Well, so the pre-market is this gapping. So whenever you have a closing price on one day, let me zoom in a little bit more so you can really see what I'm talking about. So you can see here, yesterday we closed at what? $4,396.44. And today we opened at $4,422.44. So the pre-market and after hours trading was definitely up compared to some of these previous days. Like for instance, on Tuesday we had a close, and then the following Wednesday it opened lower. So the aftermarket traders took some profits from the people who traded during the day. When you see like a bar that looks like the letter S, where the open is close to the low price and the close, or where you're currently trading, is up here near the high price, that generally tells us that the session traders are quite bullish indeed. It's when you start to get those doji bars where the open and close are at the same place, where you know that the session traders are not convinced the same as the pre-market traders. Everybody looks bullish. I mean, pre-market, we had an uptick, and now we're having another uptick. But I'm just worried for if we're going to have enough fuel in the tanks to get us to the next level, or if we're going to see a premature, drop because we didn't refuel our tanks well enough. So that's something I'm thinking about a lot. Especially with a lot of the downgrades that have been happening, especially in those growth companies that we've seen in the past.
It's kind of like a separation of this total economic news and then the news that's going on in the individual names and the sectors, and that's why we have some of the examples that we go through on the show and your pick of the week. Is this the VIX that you pulled up? It looks like.
Yeah, I always like to check in on the VIX, see where people's fear is. There was a little tiny uptick in fear as we were getting a downtrend, but now the fear is going back down. We're getting down into some really low VIX numbers, which is great for the predictability of the market. And it's not a bad thing for us premium sellers because we're profiting mostly on the time value of an option, meaning an option has a wasting asset effect. As it gets closer to its expiration date, it loses its value, and that's what we're trading on. So, we're fine, but for some volatility traders, they may be having some interesting dilemmas and maybe needing to move to some different modalities in their trading.
And since you brought up the premium selling, for anybody watching, listening for the first time, and you're not familiar with AJ's premium selling strategy, his approach to basically generating some very solid potential returns, almost like a paycheck every month, right? So really dependent on the size of your portfolio. And he's got a wonderful daily workshop that he puts on. And so if that's something that you're interested in learning a little bit more about, we've just put the link in the chat. Head on over there and check it out. This is a live show, so if anybody watching has a name that you want AJ to cover, that you want AJ to take a look at a potential options strategy, feel free to throw it in the chat. We're gonna keep things moving right along. We got a little update on the market. We'll do our trending topic. We'll get AJ's pick of the week. We'll do our speed round, and then we're going to head off to start barbecuing for the 4th of July holiday weekend, where all the rest of the traders are. And I think some traders are still around this Friday. It seems like a more active Friday before the holiday than usual. But we're going to take a quick break here. We'll be back in a few seconds. Head on over to that link, sign up for the webinar, and stay tuned. We'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So outside of this inflation news, I feel like the other news topic that I continue to see is Apple hitting this $3 trillion valuation and tech really, really catching steam. And so that kind of leads us into our trending topic of the day, which is there a tech bubble? Is it about to burst? Why is Apple up so high? Are we on the brink of a tech apocalypse, AJ? What are your thoughts on Apple and just tech in general?
I mean, what is explaining everything behind Apple? I mean, anybody at least even across the board in the tech kind of nerds out there, even your everyday users weren't so impressed with the iPhone 14. You don't have much
Innovation.
new innovation now.
Yeah,
Yeah,
innovation.
I guess they've been talking about that new headset, but I'm not sure about that either. How many people are really buying into that headset? The car just got postponed yet another year, and now it's going to be not until the end of 2026 before we see the Apple iCar or whatever they were talking about, and who knows if that's a valid date. But yet Apple continues to go higher. If I pull up the chart for Apple, ticker AAPL, I mean, the sky's the limit on this guy. Let's see if we go back a little bit. They're at all-time highs. They've had splits. They keep trying to make that. They know how their consumers are just like evangelists. And so they've always tried to make their stock price something that their consumers could buy into, because they want their consumers to also be their investors. So I remember it wasn't long ago that they did a 10-to-1 split because their stock was trading up at $1,000 a share. So they brought the price of their stock down to $100 a share to make it more available to the everyday investor. And look, it's already doubled in price in just a couple of years. And so that's powerful. And like we've been hearing in the headlines, they definitely are about to hit that magical 3 trillion number that no company has ever hit. They make positive earnings every report. They give dividends back to their investors. I mean, this company is a flood in cash, and the fundamentals don't necessarily back it up. It's a well-run company, but nothing new being innovated. Then you move on to a company like Tesla and a company like Google and a company like Meta, who are kind of innovators, right? They're Meta with their metaverse, the Google with the AI, Tesla. Well, Tesla is Tesla. And these guys are getting downsized in both size of their company and downgraded by the folks that are evaluating their stocks. So fundamentally, it just goes to show that stock price maybe has nothing to do with the backbone of the company. Are we having a tech burst? I don't know. What do you think? You're quite engaged with all sorts of technology.
I'm kind of in agreement with you in that the separation between the fundamentals, the value, and the technology is widening, and so I do think that there's something there. And with the new technologies, AI and things like that, there may be less of a need for humans, and I don't
Mhm.
know how that bodes into the equation. Um, but I don't think that I would want to see an apocalypse or a tech burst. A tech slowdown, I think, is more realistic. Um, I mean, we did just have all these layoffs like in the spring, right? And so I'm wondering what those ramifications are, right? Because
Mhm.
Twitter Twitter's big storyline was that I mean they had like 3,500 engineers, and I'm pretty sure Elon's cut that down to like 500 from last I read. So the business is still operating, but um, there's this human component, and then you're right in that the fundamentals don't always sync up with the stock price. But isn't that just the nature of investing? Isn't that just the
Yeah.
risk we all take?
Yeah. In fact, when you think about ETFs and the surging popularity of them, because people, look at ETFs and they've been told, and it is somewhat true, that ETFs allow you to basically diversify. So ETFs, because they're so popular, it's created this chicken and egg situation where um, if you buy a bunch of ETFs, you're buying a basket of stocks. So it doesn't matter how each individual stock is doing. The overall stock, either it's a sector or it's something that groups these stocks together, it's going to make them move all together. And so it's getting less and less about a company's fundamentals. Um, for us, I think that fundamentals winds up being quite important still, just in order for us to do a filtering of, stocks that we want to sell premium against versus stocks we don't want to sell premium against. So in the screeners that I use for our users, I make sure that we get some solid companies, and so I look at their fundamentals as the first level of filtering to shrink down all the stocks and ETFs to the best of the best, and then from those we then use patterns and other types of filters, option liquidity, to make sure that we can then do our premium selling on it. But I do think that there's a component that you don't want to get some fly by night company, because premium selling is a long term play, right? We expect to be in these trades for 5 to 8 months, something like that. So we don't want a stock that's going to be volatile over that time. So it tends to be good companies don't have crazy extremes in their prices. So that helps us a little bit there, but it also kind of draws your attention to right now maybe having a more diversified portfolio, getting into some value stocks like healthcares and financials, maybe even a couple of energy plays might be worth our while than just focusing on techs like like a Neo and a Tesla and an Amazon.
And it actually kind of segues into your pick of the week in that if we are seeing this apocalypse or some sort of a tech slowdown on the horizon, we can take a position as options traders to take advantage of that. And the
Mhm.
name that we can cover and discuss this approach is a tech name, maybe not as innovative of a tech name anymore, but that is Cisco Systems. And so,
Mhm.
I guess segueing into the question, uh, is there a short opportunity set up? And if so, what's that look like in your pick of the week, Cisco?
Yeah. Okay. So Cisco, as well as a lot, when we want to sell premium, when we want to set up these long-term trades, one of the first things I look for, besides being a good company, and Cisco is a good company that's not going to disappear overnight, is number one, it's not in the headlines. I don't want anything that the talking heads might cause investors, just, average Joe investors to buy or sell, because that'll cause, my price to be unpredictable. Cisco isn't really talked about anymore. About 25 years ago, it was talked about because it was on the boom in the 90s of expanding out the internet. Well, the internet's pretty expanded out now. It's more of, instead of being in a growth phase, the internet's more of in a upgrading or maintenance phase. And so Cisco's kind of a everyday name now, mostly in the B2B world, not the B2C, although they do have their Cisco and Linksys routers for consumers, but that's a very small part of their business. So you think about that. It's a company that goes, is around. And then you start looking at their techs like I am now. I'm looking at the last couple of years. And for a lot of that time, starting in about May of 2022, something like that, they just started to go in this sideways pattern around the $40 to $50 range. So if I start to zoom in here to the more recent price action, it's now looks like it's kind of in the $46 to $52 range. And it's up at the $52 range right now. And it's playing with that $52 range, the same range that it played with in the beginning of April. And so I'm actually looking, I haven't bought into it yet, but I wanted to raise all of our viewers' attention towards perhaps shorting Cisco. Um, if I short Cisco, so that means either selling short the stock, or I could buy a back month deep in the money, far out in time put option that would actually uh, work exactly like shorting the stock. That put option would go up in value just like my shorted stock would if the underlying symbol goes down. And so if I get a signal that we have found a top here and Cisco starts to go back down towards that $46 mark, shorting the stock might set us up, SIP, for the ability to then sell put premium. That would be near term at the money puts. You always want to sell those at the bottom of a sideways choppy channel. And at the same time, buy protective calls, usually out of the money. So we would buy a protective call probably with this $53 strike price at the same time that we sell our put premium. And every time we do that, we give ourselves not one, but two sources of income that can then be repeated every cycle, repeated every expiration of the options. And so I like that. So I'm looking for that opportunity. I'm looking for that signal that a top has been found. I want to emphasize that I haven't seen that signal yet, but it sure does look like we're banging our head up against this level of resistance. And if I get that signal during the next holiday week, I could see myself either shorting some Cisco stock or buying some back month deep in the money, far out in time put options to prepare myself for future put premium selling.
So anybody that's watching and is unfamiliar with options for the first time, this is a great way to get into a position that you think is going to head to the downside. And in the long run, right, if it reverses, it then starts to treat itself kind of like that paycheck, right? That payment, that premium payment. So Cisco, what is your when do you think you would pull the trigger on this?
So I'm going to probably look for, I like this indicator called the Fast MACD. So you can see here on this Fast MACD, I'd look for a crossing. So the Fast MACD has a settings of 6, 19, and 3. I would look for a red arrow crossing, and I would look for that after the market is closed. So I would look for that the market's closed. If it's got a red arrow for that day, then the next day I would try to do my shorting. I would try to either buy that back month put, or I would try to short the stock. And I would wait until the afternoon session. So I wouldn't do any trading in the morning, especially not the first hour, which is amateur hour. I would wait till the afternoon session, and then I would make sure that price is going in the way I want it to. So I would make sure we talked about pre-session traders and session traders. I would make sure that price is, in this case, below the previous day close. That handles the pre-session traders, and also below today's open range. So that's the low of the first 30-minute bar. And as long as I'm below those two, and I see some volume indications like on balance volume, accumulation distribution with respect to volume, and RSI all pointing down, then that's my signal. That would be my signal to go ahead and move forward with either a paper trade or a real money trade. And I was looking over here, you know, I would probably use my June 2024. That's how far out in time I would go. And I would probably use an option like, looking at some of these values, I like to compare the extrinsic to the mark. And so I could see myself maybe wanting to buy these $65 strike prices. So you can see that the stock is currently going for 51.63. So if I short this stock, I'll have some sort of margin requirement at the, or margin, um, you know, uh, ding to my account for the price of the stock. So would I want to have a ding to my account for 41.63 or $13.95, $13.75? I think I'd rather have the smaller amount, and then that would give me a little bit of leverage in the trade as well.
And is your confidence in this probability one that is based on you've done this in Cisco in a very similar fashion for a very long time? That's why it's categorized as one of these boring names.
Yeah, Cisco is one that we have sold premium against in the past. Again, my probability goes way up if I make sure. So I'm not going to jump out like this afternoon and do this trade. I need to see that signal that tells me that things are done topping out. So I'm definitely not seeing that signal right now. But if I see that signal next week, even though next week's a holiday week, it doesn't matter. If I see that signal at the end of the day and then follow through on the trading day, yeah, I'm pretty confident around this.
All right. Well, that's AJ's pick of the week, Cisco. And if you're interested in getting similar names, I know that you do your weekly mastermind with some of the premium members every Thursday. And so that we'll have some links for that in the chat to get access to that. But moving right along to the speed round, because we've got a couple more names that we can go over and dig into some real life potential premium selling options trading opportunities. And so let's head on over to the west side of the country. And this is Suzanne from Twin Falls, Idaho. She's interested in a name that we've covered before, and that's Carnival Cruise, ticker symbol CCL.
Okay. All right. So we did cover this before, and look at what has happened. So this is going to play to the testament that our strategies are semi, if not more than semi, automatically adjusting. So we looked at this before. We've looked at this a lot because it was in this sideways channel. So we were looking at this about every month or so. In this particular show, you can go back in YouTube and look at those histories. So we were looking at this recently, and for the folks that had bought either the stock itself or they had bought the far out in time, deep in the money call option, we were looking for opportunities in order to sell premium. And you'll notice here, I've got this little grid set up. This is called the Fibonacci price retracement lines. Now, let me tell you a little bit about the Fibonacci price retracement lines. Some people think they're just magic because you see this pattern appearing in nature all over the place, and you see it appearing in the stock market, right? And so people are always saying, "Oh, this is something really special. This is magic." Um, I think it's more of a self-fulfilling prophecy, meaning so many people use the Fibonacci price retracement lines as guides that it actually creates those levels of support and resistance at those prices. Who knows who's right, whether there's magic involved or whether, it's just us creating, seeing something and therefore making it happen. But um, what we have found is that if something is in a sideways channel, that if it goes 2 Fibonacci price retracement lines out of that channel, the likelihood that it's going to return back into that channel goes down to almost nil. The probability is under 5% in either direction. So you can see that my support and my resistance are highlighted by these red lines here. And I've got these 2 Fibonacci lines going out over here in either direction. Now, it just so happens that the second Fibonacci line is at about a 38.2% of the channel width. So if you're not a believer in Fibonacci's, you could also just say that if you're 40% outside of the channel, the likelihood that you're going to go and return back through the channel goes down to almost nil. And that can be for those people who don't believe in the Fibonacci's, then 40%. It's statistically proven that around that 38.2 to 40% number, the probability that you'll go back into the channel is almost nil. So you can see here that while we were waiting for a signal to tell us to sell premium, instead of that signal ever coming, we got above that 40% level. And that tells us that this stock is probably no longer sideways channeling. In other words, this stock has now changed its personality and it's going into a trending stock. And so cool, it's trending and we're in a good position. We own either the stock or a call option. Let's let it trend. And when it gives us an exit signal, let's take our money and run. Now, depending on what signals you use, there might have been an exit signal somewhere around here, which, man, if you bought down here at the $8.50 level and you sold up here at the $16 level, you've close to double your money. And even if you didn't sell that and you decided to keep on going, you're trading up at $18.50 now, you're over 100% ROI. And so not every trade we set up to sell premium do you have to sell premium on. You basically use these little if then else tests, like if this is happening, then do this. If it's not, do this. You just follow what the stock is doing and it'll tell you how to trade it. And so in this case, we wouldn't have sold premium. We wouldn't have bought protective options. Instead, we would have traded this as a swing trade or a trend follower and just taken the money and run.
All right. Well, that's Carnival Cruise, and I imagine the post-pandemic rebound of just people vacationing more and doing more traveling. I can only imagine that has something to do with this. So, to
I
our
think
viewers,
they also are just now not just Carnival Cruise Lines, but Royal Caribbean and even North. They're all receiving those new boats that they've been making. It takes like years, and there's only like 1 or 2 shipbuilders in the world that builds these cruise liners. They're all getting these brand new boats that are like amazing. All I know about is soft serve 24 hours a day. I love that about cruises.
really, I've never been on one, and after watching the Titanic, I don't know. I have like a little phobia, I guess, of just like seeing the hull. I think just like standing up and just sinking, right? And
Well, then
trying to.
don't do any cross ocean cruises. Do the ones that go along the land. Like there's one that goes down Cancun and Mayan Riviera and Cozumel. Just have one that stays close to the land and stay in warm water, right?
I do think a cruise will have to make it onto the list. All right. Thank you, Susan, for the recommendation, for the observation. Our next two speed round picks are international. So we truly value our international fans and viewers. And thank you. And so our next name is going to be Brian from Birmingham, United Kingdom, who's interested in a UK name, and that's Royal Dutch Shell, ticker symbol SHEL. Not sure this is one we've gone over.
No, it doesn't look like I have any I don't have any drawings on my screen. So let's take a look. Not a bad price. You could tell that there are some international investors interested in it because of the after hours. None of the closing prices tend to line up with the opening prices, right? There's always somebody after hours, probably that's very indicative of international traders, right? Because they keep different hours than the folks in the States. You can see, yeah, there's some international traders that pose a little bit of a problem for option traders, not insurmountable, especially when you've got a pattern that's somewhat predictable like Royal Shell. But the options markets that we trade in are only open during the regular trading hours. So if there's any after hours trading on the underlying symbol, it could cause, we could go to bed one night thinking everything is perfect, and then we wake up the next morning and our option investment has gone completely against us. So it does give us a little bit of heartache when we see that. Let's take a look, though. Speaking of the options, let's take a look at the option chain. I doubt that this is a bad option chain. It looks like we've got some small increments in the price. It looks like we've got great liquidity. And I'm looking at the back month option. Traditionally, I'd look at an option that's about 3 to 6 months out. And again, 20-cent bid-ask spread. There's definitely some folks trading these on Royal Shell. If I look at the near-term option, this would be the option we would sell premium against. The increments go even smaller, and the bid-ask spread is 5 cents. It's a nickel. So not bad for the amount of folks trading the options. And the pattern doesn't look bad at all either. Let me zoom out a little bit. So Royal Shell has been trading in the same range. I mean, gosh, for over a year, it looks like. And just recently, it looks like it's trading somewhere about $56 to maybe $62 consistently. And it looks like it's up here near the $62 range. We got a signal not long ago. Our signal came on June 23rd, but we didn't get follow through that was on a Friday. We didn't get a follow through this Monday on that. And in fact, today it's looking like that signal would have been erased. So we're looking for a signal that a top has been found. I would do the same thing I'm talking about on Cisco. If I saw that signal, I would consider shorting either the stock, or I would consider doing something as a substitute, which would be buying a back month, deep in the money, far out in time put option. And that would set me up for the ability to sell put premium and buy and sell protective calls in the future. And that would be a great income trade. I think Shell is set up well for this. They're not quite in the news right now. So I like that. You can see they're making a crap ton of money, and they give dividends out to their investors. So for the medium to long term, I think this is a good company to sell premium against. For the long term, just remember a lot of these petroleum companies, especially with government incentives, various government incentives, if they don't pivot and look at a different business structure, petroleum might be on the outs over the next 10, 20 years.
Quick follow-up question. How correlated do you think this trades with crude oil? Is this a name that if crude goes up or down 2%, it gets affected?
Well, yeah. So I think that Shell definitely has a component, because the higher the price of crude, right? Because oil companies do a profit margin. So they have like a 20% or 10% profit on the price of crude. So 10% of a $50 barrel of crude is like a $5 profit. If the price of crude goes up to $100, they get more profit. So just built into the price, these companies love to have higher crude oil prices, because it means they make bigger profits on their fixed profit margin. And so, yeah, but I think there's a lot more into these companies. As you can see, we know that crude has vacillated up and down. And you can see that Royal Shell has basically been going a little bit sideways for the time period. So I think that's one component, Sip, but not the only component.
Yeah, I remember in my day trading days that a lot of the traders, when there is a move in oil, they would jump into these names. And I know there's like a basket of them, and I assume that basket gets
There's
put
an ETF
into
as
yeah,
well.
into the ETF. What's the ETF, the oil ETF called?
Is it
I
USO?
believe
Let
so.
me let me
Yeah,
see.
USO. Yep.
hmm Yeah, let me see if I can. Yeah, this looks more representative of the crude price, doesn't it?
USO.
Yeah.
Yeah.
Uh-huh. It really does. The crude price went up and now it's been moderating again.
All right. Well, we'll keep an eye on Shell. So thank you for bringing that one up, Brian. Moving on to our third name of the speed round. Back in the tech sector, this is Patricia from Quebec City, Quebec, Canada, is interested in Alphabet, aka Google, ticker symbol GOOGL. Google.
Yep.
You said they got
That's cool.
downgraded this week, didn't you?
Yeah, they did, and now it doesn't. Let me go ahead and remove. I was playing around with my charts here. Okay, let's see what's happening with Google. All right, so it looks like I've looked at this before. I can tell you that we had right here. So this was a range expansion, right? Range contraction followed by another range contraction. So in reality, this is also, let's draw some vertical lines. This right here, this doji bar right here, that is the end of the uptrend as per our range analysis. So I'm going to say that that is a, do I have a red? I want a nice, what the heck? How can I not have a red? Let's just pick a red. That's cool. There we go. And the beginning of the downtrend would be right here. I don't like that one. Let's do this. There we go.
It looks kind of small, the downtrend, right?
Actually, that's the beginning. It's currently in full phase here.
Okay.
So let me go ahead and label this with like a green color. There we go. We got a green in our standard palette. So I'm going to take my linear regression line that I had extended out. I'm going to stop it at the red line. Get rid of these. And then I'm going to start a new linear regression line at the green one. Come down here. So it helps because we're focusing on closing prices. So it helps to take a look at the closing prices, and it also helps to take a look at some sort of lagging indicator to give us an idea of when these highs and lows get confirmed. So you can see I've got this 3 and 5 day EMA crossing, one of my favorite ways to confirm. So you've got that up, and now you've got this guy coming down. We'll go to this guy and we'll change some colors. And this will give us a better picture on what the heck is happening with Google. That'll be white and this will be yellow. Great. So what I've labeled here is the current downtrend. It's not as aggressive as the uptrend was, the prior uptrend, but it is moving down. And so we've had some buying. Let's go back to some open, high, low, close bars here. That's what people are traditionally used to looking at. There we go. So we had some sell-off. This was on Tuesday. This was after all the downgrades, and we've had some buying ever since. But boy, these are doji bars. These are our famous doji bars where the open price and the close price are the same, telling us that investors aren't really bought into the gains. And so we haven't yet said that this was our lowest low, and actually our lowest low would probably be, what's this one? This is 118.34 and this is 118.33. So our lowest one is not here. It's actually right here. There you go. So we are not sure yet if this was our lowest low of this current move or if it'll turn back lower. We haven't got that confirmed, which is why this current line is yellow. It could be that we drop down again and this yellow line extends, or it could be that this does wind up being our lowest low or lowest low close, and then we start moving up. But as of this date of June 6th, Google has been on a little bit of a downturn. You want to know how to trade this, I guess. Now that we have kind of an idea what the pattern is doing. Listen, I know that Google's been downgraded. I know that we had a whole discussion about the tech bust. In my mind, I'm not ready to short a company like Google, especially with the latest on AI and Bard and all that good stuff. I mean, they're always on kind of the cutting edge, and they you know they don't give out dividends, but they sure do make money, right? So I almost feel like this is going to be an opportunity to use our cash secured puts to buy Google at a bargain basement price. In fact, I'm curious what the cash secured put at $115 would be, would make us. So what I'm saying here, a cash secured put is a instrument that locks in a buy price. So if I buy a put at $115 strike price, I'm saying that I'm willing to pay $115, not a penny more, for shares of Google. So if you're willing to pay $115 a share for Google, you could go ahead and put it out there. Let's see how much. I would probably go, it's June 30th. Let's look at the weekly options. So we've got a July 7th. So if I just want to do this 1 week at a time, if I sell the, if I buy the option that is, I'm sorry, if I sell the put option that is expiring next Friday, I'll walk away with 12 cents per share or $12. If I do that every week, right, make $12, $10 every week on a $115 strike price. Well, let's just do the quick math here. I'll pull up my calculator. So I'm talking about potentially making 11.5 cents divided by $115 price, and then multiply that by 52 weeks. And so, did I do that right? Let's try that one more time. So 11.5 divided by the 115 strike price. Okay. And then multiply that by 52 weeks. So you're talking about making over 5.2%. Actually, that's not that exciting, is it? I'm not as excited.
Compared to the other examples that we have, definitely not.
Yeah, I'm not as excited about doing that as I thought I would be. So there's basically they're telling you, I don't know what they're telling you. I'm not sure. I'm interested in Google right now, but I want to keep it on my watch list. But I'm not sure. I think there's so much uncertainty as to what's going to happen next as an investor, because the pattern is not quite nailed down right now. I would almost recommend for our listener in Quebec City to look for something that's a little bit more steady. There's no way I can figure out how to do a confident trade on Google right now.
And that's okay, right? That's okay.
okay.
There's plenty of opportunities, there's plenty of positions, and you'd want more of the certainty if you're going to be putting on something that you have a feeling about. Also, Google is in the news all the time, all the time.
Yeah.
So that's one of those points that you try and avoid when putting these premium options positions on.
And also to emphasize, you saw how I went on this little journey, right? The ticker was presented to me and I started to go down different paths. It's okay to go down a path and even go pretty far down a path and then walk your way back. It's important to go through these mental exercises when you're an investor and not just jump into any trade very quickly. It's important to take yourself down and weigh all of your possibilities and analytics like we did here. I did a range analysis, a retracement analysis. I looked at the option prices. I investigated different strategies. And sure, I concluded that maybe we should stay away from Google for right now. But it's important to go down those paths and not to just use quantitative data and also just make a split decision. It's important to actually do some analysis.
And that's why we open up the floor to let people and viewers give us some suggestions, and some will be better than others. Google is kind of on the sidelines right now. But that's why we have the show. That's why we go over the examples. All right. We're heading close to crunch time here. But I did want to give everyone an opportunity to join AJ's Trading Trainers one-on-one trading program. So if you're looking for a little bit more hand-holding, if you're looking for a little bit more attention, if you want somebody to take a deep dive into your portfolio and what option strategies can be applied to take advantage of some of these concepts that we've been talking about, the one-on-one training program is perfect for that. I threw the link in the chat. If it's something that you're interested in learning more about, feel free to head on over there, schedule an appointment. I guarantee you won't get hard sold. It'll be a very, very friendly conversation. And really, it'll just give you answers, whether it's something that's for you. And so I want to give everybody the opportunity to jump in that. The link to the one-on-one training is in the chat. Heading into the holiday week, right, AJ? What should we be keeping an eye on? What is next on the horizon for us?
Well, it's a traditional time of the year that we call the summer doldrums. And it looks like this particular year, it's going to play out exactly the way we expect it to, quite boring. So looking for those premium trades, right? If a stock gets stuck in a sideways channel, that's great for 2-3 months worth of selling premium. It becomes easy for us. So I would be looking at some of these different tickers that we got brought up. Shell was one of them that one of our users brought up. I brought up Cisco. Look for these opportunities where over the next 2, 3, 4, even going into the fall, we'd be able to create some income trades out of. And we've got a holiday next week, so you can spend some of that before you go off and picnic, before you spend some beach time, firework time. You have a day off to go take a look at some of these stocks, do a deep dive.
And with that, ladies and gentlemen, we will conclude episode 87 of the AJ Brown Show. If you're looking for more tickers and more opportunities, sign up for the webinar, sign up for, or learn more about the one-on-one training, and become a part of the mastermind session, because there's a lot of smart people that have been doing this for quite some time. They get together and really throw out some good ideas. So that's available for everybody. Yeah. AJ, thank you for your time. I'm hoping all the viewers are preparing for a lovely weekend with the family, celebrating the 4th of July, and staying safe. So if you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. We truly do appreciate it. Otherwise, AJ, we'll catch you and we'll catch everybody else next week.
Sounds good. Thanks, Zip.
Adios.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.